And Dr. Narayan, second day in a row, volumes are back, and so is the market action on the downside.
Good afternoon, Pankaj. Yes, market certainly showing a bit of follow through to the downside on the kinds of trends that we saw, happening in the market yesterday. Now, initially, I think SGX overnight had raised some hopes of the trends righting itself and going up earlier, but those hopes, I think, were quickly dashed soon after the open when the market showed scant interest in continuing higher from a better open. Now it's actually taken a turn to the downside, so it doesn't really look like we are going to move up so quickly. So 10,900 levels become a reasonably strong level of resistance that the market will have to tackle now, and we may see a dip down into support before we see levels beyond 10,900. So a little circumspect is the way to be at the moment.
Right, but Dr. Narayan, we can still say that this is just 2 days, volumes are not full-fledged back, so you would still want to wait for a couple of days before taking any particular directional call?
Absolutely. I think it's far too premature to take a directional call for the intermediate term, let's say. This is just what happened yesterday and a little of today. So I would think, if you were to look at the, let's say, Nifty future level, currently at about 10,750, this is still somewhere around the weekly pivot area. And now weekly pivot is a mean level for the week's trading. And we are on to Thursday and we are just down into the mean with one more day to go. So that does not really smack of too much weakness which is emerging. So therefore I think the market is down but certainly not out. So no need for us to draw bearish conclusions as yet, but then day traders need to be a little bit on the guard with their long position.
Right. Any picks at this point of time?
Well, I think sugar stocks are slightly trying to rev up again. Dhampur sugar is something that I like every time the sugar pack wants to move up, because I think that's one of the stocks, along with maybe Balrampur Chini, that packs a maximum beta punch whenever the sector is on move. Today's stock is up at about 165, can be a buyer in this one with a target expectation of about 180 in the short term. Another stock which is not so well patronized but then on the charts is looking fairly spiffy at the moment is Nelco, National Electronics, an old warhouse from the markets belonging to the house of Tatas, as it were, and the stock is up at about 272, trying to clear immediate congestion zone tops. I think it will succeed because the momentum seems to be accompanying the price move upwards, so can be a buyer at the current levels looking for a target at about 290.95 in the short term.
Right, thanks so much for that, Dr. C. Narayan. Earlier in the day, we also spoke to Sunil Singhania, founder of Abacus Asset Management. He remains positive on the Indian markets led by earnings growth. Let's listen.
As far as challenges are concerned, I think we have seen so many challenges over the last few years, and challenges will continue. I think that's the essence of life. So notwithstanding the challenges and notwithstanding the fact that 2018 was a very challenging year, I think we remain quite optimistic about 2019 and the years forward. I think generally led by a couple of sectors, predominantly corporate banks, we do expect earnings for FY20 to even inch up to 20% plus in terms of growth. There are a lot of power generation and distribution companies which are now trading at like 7-8 times cash PE multiples, and obviously the sector has been sort of a taboo sector because of all the stress they have undergone over the last 4-5 years. But I think going forward, India is a growing economy. We are seeing power demand growing at 7-8%. If we believe that there is going to be power for all, standard of living is going to improve, there is going to be growth in the power generation side as well as on the distribution side. Also on the EPC side, one interesting phenomena in the September results which we were analyzing is the fact that for the first time after a lot of years, we have seen EPC companies not only start generating 15 to 18% ROE, but have also seen their debt levels go down. I think which is a dream for an investor in EPC companies. Maybe a few textile companies would be worth looking at. They are boring, they don't grow fast, but the kind of cash which some of these companies are generating, maybe in the next 3-4 years, you will have one period where they will give you like 50-100% return. So I think on the consumption side, our view is that stick to consumer discretionary, where the penetration is still low. where you can, still hope to grow, in double digits for the next 10-15 years. And I think that one of my favorite themes, the beverages sector comes into play. But there are other few, sort of emerging discretionary consumption stories which can also be looked at. But for a consumer staple kind of companies to give 50-60p, at least I don't find merit in that. Corporate banks are a sort of a consensus trade, but despite that, I think decent returns should be made there, because even now, I think the markets, at least according to us, are underestimating the recovery as far as earnings is concerned. On the other sub-themes, we like select niche NBFCs. On the other sub-themes, we like insurance as a theme, though we would like to wait for, the markets to give us an opportunity which is much more entailing.
Let's also talk about some strategy notes coming in. Let's start with Christopher Wood's Asia Maxima, where he writes about India as well on an extensive way. It's a quarterly product that comes out, and Christopher Wood says that India enjoys bullish structural growth story, growth based on digitization and development. FY20 earnings can grow at 26%. FY20 earnings, sorry. Globally, Fed rate is one of the key risks to watch out for, and politics will be the center of attraction rather than central banks, which have been the key drivers so far. Spectacle of trade wars are even a bigger issue that markets are not pricing in at this point of time. Samiran Chakravarti of Citi has also written a note on Outlook 2019. He says expect FY20 GDP growth at 7.4% and a modest bounce in the CPI average 4% in fiscal 20. Strong but revenue can disappoint. Nascent investment recovery can neutralize the near-term consumption slowdown. Lower oil prices, improving banking systems are the key tailwinds to watch. Monetary easing could be shallowed if fiscal deficit slips. These are the two strategies that have latest come out on the Indian macro and the Indian stock markets. Taking a break, coming back quickly. We'll focus on pharma, we'll focus on what's happening in the markets. 84 points down for the Nifty as we go into work.